Welcome back to the Tech Corner. I'm George Tsilis. Thanks for joining us once again. This week, we're going to be profiling technology firm Broadcom. Now, Broadcom is a top-tier global semiconductor company with a leading franchise in wireless communications, as well as enterprise data center and storage end markets. It specializes in design development and supplies a wide range of semiconductor devices and infrastructure software solutions. It operates through two main segments. Its semiconductor solutions, which represents about 58% of sales, as well as its infrastructure software segment, which approximates about 42% of total sales. Now, its semiconductor solutions are used in a wide array of technologies, including Ethernet switches, routers, custom silicon solutions, system-on-a-chip technologies, Wi-Fi and Bluetooth, as well as fiber optic components. These products are used across various applications, including enterprise data center, networking, smartphones, and broadband access. Its infrastructure software solutions enable customers to develop, automate, and manage secure applications across mainframe, distributed mobile, and cloud platforms. Now, some of its industry group competitors include semiconductor companies like NVIDIA, Qualcomm, and Intel, but it also includes networking giants like Hewlett-Packard Enterprises, as well as International Business Machines. Now, the unique value of Broadcom lies in its robust portfolio of semiconductor and infrastructure software solutions, which is critical for data center networking and AI applications. The main focus of Broadcom is supporting massive AI clusters with custom silicon application-specific integrated circuits, which are called XPUs. These combine processor technologies such as CPUs and GPUs together alongside supportive networking. Additionally, strong relationships with hyperscalers for custom AI accelerators and its successful VMware integration further boost its market position. Now, in recent news, going back to March of this year, the company reported earnings for fiscal Q1 of 2025. They reported revenue of $14.9 billion, which was higher by 25% year over year. On a non-GAAP basis, the company earned $1.60 per share. That was higher by 45%. The other thing is semiconductor solutions revenue grew 77% year over year, driven by strong demand from hyperscalers and the successful integration of VMware. Quarter over quarter, sequentially, artificial intelligence revenue grew 15% to $4.1 billion, which now represents about 27% of total sales. In addition to these great sales and earnings metrics, Broadcom announced two new AI accelerator hyperscale customers, and management reiterated $60 to $90 billion in total serviceable addressable market, which they expect to capture approximately 70% in the long run. Now, there are many things that are positive for Broadcom. For instance, the company boasts excellent profitability with EBITDA margins in the past 12 months at approximately 50%. This is substantially higher than the sector's average of 11%. The company's strategic focus on custom application-specific integrated circuits and ongoing software as a service monetization through subscription transitions are expected to drive top and bottom line growth going forward. Now, from a valuation standpoint, forward sales and earnings growth are nearly double their 5-year historical averages. With forward earnings growth in the next 4 quarters to be approximately 28%, the stock is currently trading at a forward multiple of 25 times earnings. Now, when we take the ratio of the price to earnings growth of less than 1, this suggests the stock is trading at a reasonable price. Now, in light of those positives, we also have to address some of the concerns about Broadcom. First, some of the risks include potential excess computing capacity and the uncertain timeline of AI monetization. The company also faces geopolitical risks, including U.S.-China trade tensions, which could impact revenue streams. This is important, particularly due to the company's reliance on Apple as a customer, but also China, which represents about 20% of total sales. Now, Broadcom's market optimism regarding its customer accelerator opportunity has not fully materialized in the short term. This is causing market volatility and uncertainty among investors. Now, we can see some of this uncertainty in the price picture from a technical analysis standpoint on Broadcom. The momentum on the stock is quite mixed. For instance, in the last 52 weeks, the stock is higher by 27%. However, contrast this to a year-to-date decline of around 34%. This indicates near-term bearish sentiment and shows some recent volatility. Now, the stock is trading both below its 50 and 200-day moving averages. Yet the 50-day moving average is still above the 200-day moving average. This suggests the intermediate-term monthly trend is bearish, but the longer-term trend is still bullish. The other thing to keep in mind are indicators. For instance, the RSI indicator right now on a daily basis in the last year is trading below 30, which suggests there may be near-term oversold conditions in the stock. Now, to summarize, many of the largest companies in the world, including most Fortune 500 companies, as well as government agencies, rely on the company's software solutions to help manage and secure their on-premise and hybrid cloud environments. Broadcom also boasts exceptional profitability, evidenced by its EBITDA margins of 53% in the last year. The major growth driver continues to be networking solutions, particularly to those hyperscale customers. The company's strategic focus on high-performance design, integration capabilities, along with its comprehensive suite of innovative technology products, may allow it to maintain a competitive edge to come. Now for the week ahead, we'll turn our attention to Big Blue and profile the legacy tech giant IBM. Thanks for watching the Tech Corner once again. Please like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you next week.